Welcome to Profieltraders. This is Reza and you're listening to my market analysis for January the 22nd. I'm going to put the daily chart of the ES so that we look a little bit on a bigger time frame to see what's going on. If you go back and look at my last video when we were 2 days ago in here, I clearly stated that this looked to be a good rejection from the bottom and that the likelihood that from here on we would go to 1900 was extremely high. Now Friday we came up and touched 1902, rejected back a little bit and ended up coming and closing at the high of the day, which is a bullish reading. Also, we can notice that after this big push up on Thursday, Thursday overnight, most of the range of the overnight for a change was not challenged to the downside, which is telling me that in the very short term market is now shifted into a possible short-term up mode. Of course, what caused this turnaround, it's the silliest news possible, and which is Mr. Draghi came out on Thursday with the silliest statement I have ever heard in my whole entire life. And his statement was that he is going to do an unlimited amount of QE as necessary. Unlimited. There is no limit. So basically what he's saying, it could be 10 trillion, it could be 100 trillion, it could be 5,000 trillion billion, he will do it. There is no more limit. That's what he said, the silly man. No more limit. So, of course, no more limit of more printing, more debt, more gambling money injected into the market, the same garbage that we did for the last 7 years and pretty much achieved absolutely nothing with it. Now that little monkey, Ben Bernanke mini-me, wants to get into this business of doing unlimited QE for as long as it takes, for as much as it takes. And now, this coming week, the Japanese guy is going to come and announce the same silliness. So, market is back again into being focused on this QE nonsense. And as we all know, Wall Street likes it. And as they heard the magic word of unlimited QE, money has poured in. Now, let's not be fooled. We look at the market previously from this collapse here to this collapse here, it took us this long. This time, from this collapse to this collapse, it took us maybe a third of the time that it took the last time between the two drops. This is absolutely no doubt indication of a much bigger trouble ahead. These are all warning signs. I remember when I was trading the dot-coms, when that piece of trash Amazon was in the 300s or whatever hundreds of dollars they were, or that piece of garbage Yahoo that was at 400, 450, and as the bubble burst, they would come from 400 to 300. People would think it's a buy of the century. 300 would become 200. Then they would buy 200 thinking that they got the deal of the century. 200 would become 100. 100 would become a 50, 50 would become 20, 20 would become 5, until everybody lost every single penny of savings that they had. Do not get fooled by these dead cat bounces, these silliness bounces on QE business. The system is broken. The Federal Reserves of every single country is broken. And this time, once the structural recession and adjustments towards this whole phony baloney manipulation will implode, there is not enough QE in the whole solar system that will be enough to save the market. So market is damaged, market is bruised. In the process, you will have this kind of a dead cat bounces on silliness of a news of a QE that doesn't fix anything whatsoever. We have done 7-8 years of QE, Mr. Bernanke, the wild little donkey, running with his QE for 7 years. What have we done? Nothing. Still 10-point plus unemployment. Of course, not thinking about the big lie of the 5.0% that doesn't exist. An average growth of a anemic 1.5% every single year for the last 7 years. $20 trillion in debt. The Federal Reserve's books, we don't even know how much they have in debt. They are so scared to show their books to anybody that they protected like if it was their own eyes protecting. Nobody knows how many trillions of dollars the Federal Reserve has accumulated in terms of toxic assets on their books. So long story short, these short-term rallies will be short-lived and market should continue down, and based on this manic fake manipulation of 7 years of QE, if we're going to start to deflate, there is very much so room for us to drop towards 1400 and eventually even 1200 for this coming year. Therefore, one has to be very careful not to be fooled. Once we get towards next areas of resistance, which will be first one at 1910, second one at 1930, and then after that we are looking at 1945 to 1950, which point, if reached, will be the mother of all resistance, sell in my opinion. But in the short term, the QE is ruling, market likes it, we are a little bit oversold, so seeing a continuation up would not be surprising. First level of significant support is 1883.5. Below 1883.5, we're gonna have 1875, and past 1875 we have 1865.75. On the upside resistance 1910, we do clear that. There is not much before 1930, and after that 1945 to 1950. When we go back and look at the analysis on crude as well, I clearly stated to you when we were down here that it was looking that we were building support down here, and I wouldn't be surprised that we would rally towards 31, 32, where Friday we reached 32 and closed at 32.24. Of course, this is not because the supply and demand side of things has changed. It has to do with the fact that there is a massive cold storm hitting all the East Coast, and they are fearing that this massive amount of cold will create demand for crude in the very short term. As soon as the storm is gone, everything that you see here on the upside will be deflated and we should be going back down again. But so far it did look fine, it does look fine with a bullish close at the very high. For anything bearish to happen, we need to come and break below 31.60, After 31.60 we have some level of support at 31.20, and if we break below 31.20, then we should drop towards 30.35 to 30.5, third level of support down there. In terms of resistance, first level of resistance that I see of significance is 32.75. After 32.75, of course, we will be having to deal with the 33 round number, and if we do break above 33, it is possible that we will go towards 33.5, but I truly do not see price going much higher than that. So from that zone up there, we should start to see a significant pullback to the downside. This is just very short term. It is nothing, because demand has picked up and all of a sudden crude is a healthy market. Not at all. This is just a short covering rally into a very cold weekend because of the storm coming into the East Coast, and that's about it. Thank you for listening. This was Reza with Profieltraders. If you wish to learn market profile and join my trading room, you can get the package from my website, and that $550 deal, which includes all the courses and 1 year to my trading room membership, will only be valid till February 11. After that, prices will go back up. Have a wonderful evening and the weekend, and I will see you on Monday.